And when we look at the markets, I mean, Coinbase just released their earnings report, very bullish. So Q4, they have 2.4 billion in revenues, almost like close to 2023 revenues, which is crazy. Robinhood Q4, like 700% up from Q3. So I'm very bullish. I mean, I think things are shaping out very well in 2025.
Welcome back to Bitcoin.com's Token Narratives, where we discuss the biggest stories shaping the Bitcoin and cryptoverse. My name is Graham Stone, Bitcoin.com marketing operations lead and director of Hopium. I'm joined as usual by news and research lead and chief voice of reason, David Sencil. We have Bitcoin.com CEO Corbin Fraser in the house, so check your financial privilege. And we also have a special guest this week, Mr. Ido Sofer, the CEO and co-founder of Sodot. Sodot is a multi-party computation key management infrastructure provider. And we'll be diving into what multi-party computation wallets, MPC wallets, what they actually are, how they're different from other crypto wallets, and why that tech is important. And I'm also keen to get Ido's insights on some of the regulatory changes happening in the crypto space, as he has a background in that area, having worked as an executive in the Israel Ministry of Finance in his pre-crypto life. But before we get into all that, let's start off things as usual with a gut check on the markets. Ido, as a newcomer to the pod, we would love to get your thoughts. So, all things considered, are you generally bullish, bearish, or maybe neutral right now? What are your thoughts?
Yeah, fantastic. First of all, thanks for having me. Sounds very boring when when you introduced me. It's a lot less boring. I mean, we'll dive into that. But overall, I'm excited. I mean, let's see. Event season is starting. We have Consensus Hong Kong and East Denver back to back. And when we look at the markets, I mean, Coinbase just released their earnings report, very bullish. So Q4, they have 2.4 billion in revenues, almost like close to 2023 revenues, which is crazy. Robinhood Q4, like 700% up from Q3. So I'm very bullish. I mean, I think things are shaping out very well in 2025.
Okay.
Are you feeling like what part of the cycle do you guys feel we're in right now? Because I've heard from some folks that are like, they're seeing some rumors of Binance has been selling. They've been seeing that maybe, there's some exhaustion in the market. We've been kind of crab crawling between 95,000 and 100,000 US per Bitcoin. I guess, are we just kind of waiting for the next leg up, or is this sort of like, did we top out? Are we, was that it? Was that the bull market? Yeah.
It's a great question. I mean, I think that this time consumers, they don't lead but they follow. So there's a lot of infrastructure things going on with regulation, and things are happening in the States and new investments and so on. I think there was a lot of hype, and then everyone was saying, all right, what's going on? Why everything is not booming up? But I think that the foundations are being built right now again in a very, very strong way, and also a right way. And I think that consumers will follow. So I don't mind like the downfall, like that we're in right now. I don't think it's here for the long run.
Yeah, I just wanted to bring up this poll, which was posted by The Giver on X. And the question in the poll was, has this been the hardest cycle for crypto you have experienced? And the majority of people have said yes, answered hard yes, or soft yes. In total, like almost 70% of people saying yes. It's the hardest cycle in crypto so far. So sentiment is quite bad, at least amongst crypto Twitter.
Yeah, I mean,
I think it's. I mean, if I can jump in, I think it's kind of because the alt market has been so unpredictable versus previous. I'm going back to 2017 ICO booms, and then DeFi summer 2022, and then this one. It just seems like the only things that have temporary up momentum are meme coins, but they're extremely temporary and high degeneracy. There's just so much going on that you can't really keep up unless you're living in the trenches 24/7. And yeah, it's tricky. I mean, like, it's gotten to the point where it's somewhat boring, where like you're better off just buying Bitcoin and kind of holding on to that, because ETH has just been kind of a dumpster in terms of like a number go up bull market asset. Yeah, it's just been a weird cycle. I don't know if I'm like a hard yes on that poll, but I'd be like a soft yes. This is weird. It's a weird one, but I'm still kind of, it feels still early to me in the sense that there's probably months still of bull market to this one would be my guess. I think we got until summer maybe, and then we'll see where things are at. Yeah.
I agree with you, Corbin. I agree with that. I think the reason people have said a hard yes is because I think also I've heard other accounts talk about how a lot of people miss the Bitcoin run up, right? A lot of like firms and people who have been in this for a long time have missed that run up. And yeah, they were in ETH and other alts, and they haven't performed as well. And so they've been watching Bitcoin grind up and not experiencing those juicy multiples. And so I think that probably explains a lot of it.
Well, and maybe this is like the cycle of we were all leading with greed, right? Everyone was looking for the alt market 10 to 100x's, and Bitcoin being, it's only going to maybe 2 to 3x. That's not good enough for me. I'll put my money on some other L1 or some fancy new contraption that might work. And unfortunately, pretty well everything is underperformed relative to BTC.
Yeah.
And
I think I think that again gets explained by the fact that what usually happens or has happened in every cycle up to this one is Bitcoin pumps, people take those gains or some percentage of those gains and puts them into alts, and then alts pump, right? But all or significantly, like probably the majority of these Bitcoin gains have been captured by like institutional players via the ETFs and stuff like that, and they're not distributing those profits into the rest of the crypto complex.
So I think the question is now, clearly Bitcoin has led this cycle so far. I think the question is now, will that continue through to the summer? Are we going to see Bitcoin continue leading the cycle?
Good question. I think last episode, you talked about the Bitcoin reserves and so on. So it seems like there will be some pressure, buying pressure from a lot of external or new resources. So I would say yes to some extent. I mean, there's a lot of companies that they have their processes before they invest in Bitcoin. They diversify their portfolio. So I think we're going to see that, and it's not there yet.
So you're saying there's a delay. There's going to be more investment in Bitcoin, and Bitcoin probably will lead the way. But
I think so.
Yeah, I think maybe this is a good segue to.
Wait, hold on,
question.
Graham. Can I ask a related question? Let's take the other side of that. If Bitcoin doesn't lead, what is going to lead? What could lead?
Yeah,
can you think of anything realistic that could do that?
Very good question.
I don't know. I can't. Can you? I don't know. Maybe Solana?
Let's say that ETFs are leading the way, right? Let's say that institutional investing is leading the way. So you are seeing, attempts to also launch ETFs with some altcoins, right? I don't know if they're altcoins, but I don't know. Solana is an altcoin. Probably is. It's a debatable one,
Probably, yeah.
yeah, probably. But Solana and XRP and others. So maybe, but it seems that Bitcoin is just becoming mainstream asset for every company that holds, a portfolio or manages their assets. So I would say that it looks like a divergence in the market, almost like you have the Bitcoin, right? The ones that institutions and companies, enterprises feel okay investing, even the largest ones. And then you have the pump.fun things, the wild, wild west. And in the middle, there's a big question mark. It is an interesting cycle.
So that's where I think that we might be able to segue into a discussion about regulation, because you could argue that that the thing holding back that middle section you're talking about there, Ido, has been the lack of regulation, and that we might be turning a corner in that regard. And so maybe that is the catalyst for things in that middle section, like the tech plays, to perform better. Is there any credence to that?
It's it's a good question. I mean, I'll provide a bit of an intro about regulation and where I made this. So before I get into crypto, I get into crypto in 2021 as a VP business of Zengo. But before that, I worked in the Ministry of Finance in Israel, mostly around industry innovation. A large part of my role was to promote business-friendly regulatory frameworks, lifting barriers, increasing competition, which is basically saying fight with regulators all day and try to get something sane going on. And what we believe there is in the Ministry of Finance is that government's intervention in markets should be minimal. So a government should be an enabler, sets the rules of the game, and then lets the private market take it from there. And we always look from Israel. We always looked at the U.S. as a place to draw inspiration from. Like, clear rules. Everybody knows what's good, what's bad, and then you play. And then, I mean, and this is why it was pretty shocking to see the States, what's going on in the States in the past years. So what you had is like arbitrary decisions. You had companies investing a lot. You had the Paxos of the world and Exodus and Coinbase. They invested a lot in being compliant. And they didn't get any dividend for that. They got, some of them got Wells notice and things of that nature. And then what you have in the market is you just don't know, and you don't know if you're going to invest or not, because when you invest, you want clarity. Is this a good one or bad one? Let's just calculate the ROI and then decide. But when there's arbitrary regulation, you don't know. So there weren't any investments. So what we're seeing right now, where there are clear rules and there are expectations for clear rules, is that US-based companies that set set in the dark, looking at their European competitors running forward. They're just very bullish on investing and trying to catch up. And I think for Bitcoin, I agree. I mean, it's very simple, but I think also across the board, that's the sentiment in the States right now. So that's why I think I'm very bullish on 2025 and how things are shaping. And the States do lead innovation usually, especially technological innovation. So that's why I think it's an important catalyst.
Yeah,
All right.
I just want to say again, this echoes several anecdotes I've said before on the podcast, where I was talking to business people in Singapore, UAE, and where was it, Taipei, and I said to all of these people, as an American, I was like, I'm very jealous of the fact that your governments are kind of working with you to create this regulation, and America hasn't been. And they're like, yeah, that's good. We like it, but also you guys need to get your shit together. We're waiting. We're all still waiting for America to do stuff, right? And so
Exactly.
Which was surprising to me. It wasn't like, yeah, we're going to get a competitive advantage. They're like, yeah, but you also need to do this. So
is that out of fear that once the US does make the regulation, then they'll just be on the wrong side? Those countries will be on the wrong side. They have to change.
They were saying that their regulators, even though they have their own rules, their regulators still were looking at like the SEC. right? So
Yeah.
even though they had their own rules and their own frameworks, it's not that it didn't matter, but they wanted to be on the right side of the American regulators themselves.
Well,
Yeah,
like
exactly.
I think with the U.S. right now, we're still sort of in this honeymoon period with Trump, right, and with the Bitcoin Treasury debates and talks, and there's this hopium still in the air that more clarity will be given, and that the decisions made by the U.S. administration are going to have these trickling effects across all countries and all borders and all regulatory bodies. But I think it's going to be one of those, like, government still moves slow, like, and it's probably going to move even slower in the event that, Doge is just knocking off more and more, more and more groups that, who's going to be responsible for some of these things. And, how many of them are going to fall under the commodities wing, and how many of them are going to fall under the SEC? And, there's like this resurgence of talking about meme coins as collectibles, which I don't know if you guys have picked up on that, but it seems like a lot of folks in the US are making it very clear when they're trading meme coins. They're like, no, I'm not trading crypto. I'm just trading collectibles. These are like totally different type of assets. So like, it doesn't apply. It's a different thing. It's not SEC. It's not commodity. I don't know what it is. It's something else. Maybe it's a commodity. Sure. But yeah, it does kind of seem like we're not yet seeing those trickle out ripples from the US yet, because it's still, everyone's kind of figuring it out on the go. And it's probably going to be another 6 months of uncertainty, which might lead to, say, a more delayed alt market run, or I don't know, maybe this is the cycle that skips the alt market and it's just meme coins, aka collectibles, and Bitcoin. But I don't know. I'm hopeful for alts, because I do think that, like, I'm one of those people that do think that there's a lot of cool stuff happening in crypto, and a lot of great projects are trying to create new and innovative things using blockchain technology and using privacy and using tokens and using decentralized tools. But it is one of those things that, yeah, like Ido was saying, like, everyone's kind of like scared to invest in these things that right now there's just not a lot of clarity on. And because there's not a lot of clarity on, there's not momentum behind investment. And at least for me, I don't want to be the first investor, right? I don't want to be the first. I'm not so rich that I can just be like, I'm throwing money everywhere. I want to be like, not the last in. I'm cool being like somewhere in the middle, And I think nobody wants to be the first, and nobody wants to be the last. But nobody wants to, nobody wants to, like, we're waiting for who's going in first, who's jumping in, and I'll follow suit after. It's like, okay, there's some sanity here.
Yeah, I agree. Just one note on like meme coins and new stuff. So what really gets regulators upset is when consumers get hurt. So if consumers get hurt, with all of the new things that are going on, that could really change the momentum and also, the way that the government looks at crypto. So I would say that there's all the responsibility from the crypto, the crypto ecosystem and the crypto. I mean, the builders themselves not to mess up too badly. I mean, there is a small percentage. There's ever will be. There's always will be. But if things go bad and a lot of consumers get hurt, there's going to be a backlash. Yeah, we've seen it 1,000 times. I hope it won't happen again.
Yeah, I mean, I think that's going to happen this cycle. I think you're already seeing like the beginning. Like, there's like 3 class action lawsuits against Pump.Fun, right? And lawsuits against different celebrities that are slowly making their way through the legal system. So I think that's only going to build. Like, you see the what's it called, Portnoy thing? It's just like,
yeah,
well,
that was bad.
In the event that they are collectibles, let's pretend they are collectibles. Let's all take that meta pill of, yeah, it's a collectible. I guess if we were to make that argument for the commodities side of stuff of meme coins are just collectibles, then I mean, the way you could justify that is, if you bought Pokemon cards and you paid a lot of money for the Pokemon cards, and maybe the price of Pokemon cards went down, you still have your collectible, you still own it, it's just not worth as much as it used to be worth. And, this is a buyer beware. You bought trying to make, turn this commodity into a speculative asset, but it wasn't. It was a collectible. And, the same with Thai Beanie Babies. You could have bought Thai Beanie Babies at the top and tried collecting them all and had a big army of cute little bears. And turns out the Thai Beanie Baby market just wasn't that rock solid, and the trend moved away. But you still hold your Beanie Baby; it's still there. It's still worth kind of what you paid for because you bought the asset. It's a commodity. I don't know for sure if memes fall under that, but that seems to be what the U.S. is kind of pushing. And we've heard some folks in the administration call them collectibles. I think even Dave Portnoy was calling them his jail. What was it? Jailbait. He was like, these are collectibles. These are just collectibles, guys. Don't worry about it. So, part of me is kind of like, I feel like sometimes the way they're talking about it is it's like under their breath as like, I think it's a collectible.
Whether or not these things are legal, like regulatorily acceptable, I think that is maybe a little bit besides the point. Because either way, I think there's a case to be made that meme coins and NFTs before them and ICOs before them are just a bad top of funnel onboarding experience for normal people to come to crypto, because you get in and you just get ripped off. Right. So
that's an interesting
what if we had a better top of funnel, like, I don't know, stable coins that you can just earn interest on and use as collateral or something like that, right?
I think you can make. Well, okay, sorry, go ahead.
No, that's it. I mean, and like, just maybe it seems like in the US, the stable coin bill is going to be the first thing that gets passed, and maybe that will make it easier for that type of like more normie friendly top of funnel entry point to crypto to work, and then from there, it could build, and people won't be like, oh, crypto's that thing that just I got scammed on. It'll be that thing that like does something for them.
I think part of me thinks though that line of thinking though is kind of it's coming from a background in crypto, and you are aware of the chaos of crypto. And I think most people coming into crypto that are interested in it are purely in it for the greed aspect. Like, they're not in it for the tech. They're not in it for the libertarian ideals. They're not in it for the collectibles. They're in it for number go up. And they see it as sort of a better bet, although still a bet, than just holding fiat. And I don't see stablecoins as being a sufficient bet. Even with yield, they're still like, why would I want 5% when I could put all my money on this fart coin and potentially get a 5x,
1,000,000%.
Yeah.
So people in crypto, I mean, we're in a position I'm not sure that we're aware of, but when you see the markets crash like 20-30%, you have your morning coffee, you say, yeah, I'm good. It's like, and regular people, they see 10%, they see the red candles and they're like, oh my god, what's going on? And everyone in crypto is like immune to that, but new people coming, it's pretty insane. I mean, even what's going on, like last week was So it's a good question though.
Yeah.
What's the incentive of going to crypto?
I do think though that this whole like ICO meme coin, the way I think the biggest problem to me is how it's set up, and we're kind of working through all these different like variations of scams. There's just like layers and layers of scams, and I think eventually, I'm pretty optimistic about this actually, that we'll get to a point where there is a way to kind of fair launch these kinds of things, deploy capital on chain that pretty much gets through all these just like layers and layers of grift. Man, one of the Portnoy whatever their TikToks that went viral this week was pretty hilarious when he was talking about all these people just sniping the coin the second it gets listed, and like not letting
his
the
range
project
was
develop.
Great. I loved his.
It was
range.
hilarious.
Yeah,
I mean, like it's so funny. You could have. I'm sure there's like maybe to be generous, a lot of these celebs probably said this kind of stuff privately if they actually understood anything. But I heard someone say this past week that this is on the base level. You can't forget that this is a great way, like a new version of capital formation. It's global, without borders. It's just that it hasn't been done well yet, and we have to get through all the various iterations of scamminess. So
yeah, I think like Trump coin could be an example of that, right? Like it just to me it could have been done so much better. Like you could have done anything really, like made it have something like with his NFTs, like some carrot that if you hold it,
But
you
part of
get
me thinks that
something.
they weren't trying, like, we come from this, this tech has the opportunity to be a utility. And I genuinely think they were just like, it's a collectible. It's a collectible in a token format instead of it being an NFT. And I
it's
think
down
that was
only. So,
yeah.
But Graham, you know what's funny? If you look at it from like a tokenomics perspective on just like meme coins, it's one of the best, fairest meme coin launches kind of in history, right? At that scale, which is hilarious because I agree with you, Graham. It wasn't handled the best, and there was a lot of insider stuff and everything like that. But the team that was behind it, you could tell that they kind of knew what they were doing because they got around a lot of the grift, right? I mean, still there was a lot and everything, but it just shows you how much stuff needs to be done. And I think some of that will include regulation, right? I really do. I think you'll have to do a lot of like on-chain stuff, smart contracts, and how you kind of handle the decentralized part. But I think you'll probably have to have some teeth with the government being like, if you don't go up to this level of due diligence or whatever, we're going to come in and slap you down. So I think it'll probably be both.
Maybe a question for Ido is, I guess, what made you make that leap from traditional finance into crypto? Like, was it the tech? Was it the libertarian ideals? Was it the greed? Was it a mix of all three? Or was there like some interesting protocol that kind of dragged you in? Or how did you get in?
That's a good question. First of all, from a career point stand of view, so I was in that, in your career, often you have those points where you're saying, okay, I'm sliding through, and if time goes through, then time goes by, then I'll find myself in a position where it's just what I've been doing all my life. So I was just about to take on like a more executive role, which essentially will lead to like the additional 10 years in the government. And I said, okay, let's just take a break and see if this is what I want to do in life. And I took like a month off. It was a very bad idea to give me that month off. And I came back and I said, well, no, I want to do something else actually. So I quit my job and I went. So I said, I want to go full tech. I want to go somewhere that I need to um, develop myself in an area that I don't have any dividends, by the way, on the best things that I did almost. And in Zango, I think Uriel, who hired me, I'm not sure that he even knew what I did before. Like, I think he thought I was like in the tax authority or something. Like not sure what I did, but for me it was exciting. And with crypto, so I looked at it and I said, all right, what we try to do in the Ministry of Finance is essentially create alternatives or create competition. So at the end of the day, the everyday people will benefit from it, from more freedom, from more economical options. And then I looked at crypto and I said, well, that's pretty much the same, right? It's a super, super exciting space. And besides, there's a lot of things that, are a bit scammy and or I don't know. But at the end of the day, crypto is challenging the traditional finance and the way that things are being done with super, super interesting technology and a lot of innovation and a lot of challenges. And I said, seems like a fantastic space. And I just, decided to dive into that. And I'm very happy I made that decision.
Nice. Well, one of the challenges in crypto has long been the private key infrastructure. So I think this is a good segue to the MPC wallet. Could you explain that? Like, what is Sodot and what is an MPC wallet, and why is it better than the other way, than the old way?
Cool. I'll try to make it friendly as possible. I'll try to make it as friendly as possible and not intimidating. But generally, by the way, Sodot is secrets in Hebrew. So that's the reason for that name that we have. But essentially, MPC, as we said, stands for multi-party computation, and it's a technology that is used in Web3 to manage private key security. So a private key is a single point of failure in the regards that if it's lost or stolen, it's game over. And we've seen that a million times before. And by the way, over $100 billion have been lost this way. I mean, probably more. And MPC just changed that. And a private key with MPC, a private key is generated in a distributed way. It means, for example, 3 shares. So let's say David holds a share, Corbin holds a share, and Graham holds a share. And each is stored in a different secure location. And those shares, they communicate to sign transaction without reconstructing the full key. So it's a bit magical. There's no key, essentially. There are just shares that communicate with each other to sign a transaction. So what does that mean? It means that if I don't have a private key, then first of all, I can lose it. And second of all, no one can steal it from me. An attacker needs to also compromise David's device and also Corbin, and probably at the same time. So that provides enhanced security. And we can also use that for redundancy. So let's say Graham has a backup. So if David loses his, then Graham and Corbin can recover it. So it solves the inherent problems or the very basic problems of key management. And it's pretty cool. Sounds like magic. It's only very complicated mathematics, which I know nothing of, but my partners are experts in. And for retail wallets, so MPC doesn't only provide better security, but also improve the user experience. So instead of seed phrases, which by the way, they kill conversion rates. Think about the horrible onboarding experience. We talked about, newcomers to Web3. And then you get this, you download the wallet, and then you see, all right, this is a seed phrase. If you lose it, boom, a warning, a red warning. And then you have like, okay, there's a quiz. What do you mean there's a quiz? And then you need to write it down. And then, so it's like,
Yeah,
with
I can
MPC,
tell
you don't need that.
I can tell you that when I'm considering like, should I make a new wallet? It's in the back of my head. I'm like, no, I'm not. I'm just not going to do it because that means I have to go find my like secure notepad, write the thing
Exactly.
down, right?
Exactly.
So
I mean,
even me, like being in the space for a long time, it reduces the amount of new wallets that I make.
I agree. So right now you have great technology. You have multi-party computation, MPC. You have passkeys for authentication, and you can generate together a one-click, beautiful, delightful onboarding experience that is also much more secure than seed phrases. So you get security and user experience together. And I think that's why leading companies in space are adopting this technology for managing private keys, either internally like custodians, but also for their users. It's just a Web 2 great experience, and boom, one tap and you're in your wallet. And I think that's what we're striving for as an industry. So I hope that was not too
Yeah.
technical.
What about the
Yeah.
downsides? Surely there's got to be some downsides or risks.
That's what I was going to ask.
Like,
Yeah. First of all,
I mean, what happens? What happens if 2 of the people are gone?
Yeah.
Sorry, that's a dumb question. I don't really.
No, there's always downsides. So one, you can argue that in crypto, where you want complete control as an end user, now you have usually there's a wallet provider that the wallet provider now has some sort of saying, right, because they countersign with your transaction. So there's an element of censorship. So you can say, all right, I mean, the wallet provider is protecting me, and they can check that the transaction is secure before they sign it, but there's also an element of that. There are ways to get past that. Let's say that the end user holds 2 secret shares and the wallet provider 1, so they can the end user can always exit the system without the wallet provider. But that's on an everyday basis. That's that's like that. And second of all, it's very complicated. There's a lot of there is a lack of standardization. So essentially, you either know very well what you're doing and you audit the code as well, or you can just say, I have MPC, and there's a lot of companies that don't have the ability to check or to verify that it's really good tech and it was audited and there's no security vulnerabilities. So it's really, there's probably 100 people in the world that can really build this technology right, maybe less. So it's very complicated, and if you do it bad, and there are implementations that are not secure that are out there, unfortunately. I'm not gonna name names, but so it is a matter of experts in that regard.
Yeah,
So
I
would you
think
go ahead.
maybe
Corbin.
just speaking on Bitcoin.com's experience too with, our self-custody wallet app, we use 12-word seed phrases. So, we do everything we possibly can to reduce friction for users by getting them the wallet, but then also encouraging them to back it up. And, once they have funds on it, we alert them and notify them multiple times to say, back this thing up, and until you've done the backup procedure, we annoy you basically. And that's kind of the best that the wallets can kind of do, where we would like to get to that point where it's like we don't have to worry as much about the users, and you can do encrypted cloud backups and stuff like that, but there's still that single point of failure where if you used an unsecure password and someone got into your email, there's always that scary risk there. And then but I think the more common risk is just people didn't write down the 12-word seed phrase. They meant to, they intended to, but they just never got around to it. And they skipped enough screens and kind of like, button mashed their way through all of the prompts and said like, I'll do it eventually. And then they don't, because humans are lazy and we just, sometimes ignore the things that we need to do. And like support tickets, we get them, people lose money and they say, I didn't back them up. Is there anything you can do? And unfortunately, no, there's not. So yeah, we've like Bitcoin.com, we've been checking out this MPC tech for the better part of 2-3 quarters now. Our team's been meeting with different MPC wallet tech providers, and Sodot's been the one that we've been partnered up with here. So we're, I've alluded to this, I've mentioned this on some other calls, but yeah, we like Bitcoin.com, we only have an iOS and Android app, which in my opinion is just not sufficient in this very web connected world that we're on. So we've been looking at ways we can turn the Bitcoin.com domain and website into a wallet where it's not dependent on the iOS Android app. But the only way to do that is to have some of this like secure mechanisms to let people create wallets. And this is where our team and the Sodot team have been building this Bitcoin.com account. We're trying our best to abstract away the self-custody-ness of it to kind of give it that Coinbase, but not Coinbase feeling. Do you know what I mean? It's Coinbase with self-custody, but it's all backed up with MPC tech. So, you don't have to worry about potentially losing all your money and reducing all of these like high friction points. So we can just get people into the website, get them into an account, which is basically a wallet, and then get them into buying. And they're not really having to go through that terrible, onboarding of, back up everything, go to a secure location, close your blinds, close the doors, don't show this thing to anyone, never report. If we can just make it a couple clicks, life gets a lot easier for new people. And I think that's going to be a big multiplier for us getting more people into the Bitcoin.com ecosystem, but also just into Bitcoin in general. Because I think for a lot of folks, if they come to Bitcoin brand new, or they come to any crypto app brand new, so much friction that they might just be like, you know what, this is cool, I'm happy it exists, but it's too nerdy for me. I think I'm just going to buy Bitcoin as an ETF. I'll just use my bank app instead. And if it's easier to use your bank app to get Bitcoin, then self-custody is never going to make it. It's not going to be as competitive as it needs to be. And I think the MPC tech.
Yeah.
Oh, what happened? I just saw numbers show up, guys.
Shit, sorry. That was me. I'm sorry. I don't know what I did. I was trying to press unmute. My bad.
Yeah, Corbin, that was very, very well articulated. And just to say that, we got a sneak peek at what you guys are building, and it's a beautiful wallet with a unified experience across the ecosystem. That's I think it will be a fantastic experience for existing Bitcoin.com users, but also there's a lot of, you guys, you're one of the faces that newcomers see when they enter the space. Someone writes Bitcoin in Google search, they will get to Bitcoin.com. So there's a lot of responsibility, I would say, for providing that experience for someone new that's saying, okay, I don't know anything. So please provide me an experience that I'm secure and is also delightful and will make me wanna invest, wanna be in this ecosystem. So I think it's shaping up beautifully, and we're super excited and we love working with the team. They're a very,
Yeah.
very strong team you have there.
Yeah, we're hoping
Actually
we can get
visiting
something
them.
out. Yeah, I think that like with any luck, we'll have at least a beta functioning account system powered by Sodot within the next. I'd say we're probably before the end of Q1, maybe early Q2. I think there's still a little bit of work to do on the UI UX front from our team's end, but we're really excited to see this thing get going. And then, I like you said, huge responsibility on our part just to make sure that all of those people coming to the website, when they click create an account, that they're being given a great experience and a secure experience, and get them into Bitcoin, shitcoins, meme coins, whatever whatever they want. It's just making that cross platform, cross chain kind of wallet experience good. So
Exactly.
I'm curious about the technology. Is this being used anywhere else outside of crypto or outside of this use case?
Yeah, that's a good question. So MPC is a family of algorithms, and essentially, if we want to be more specific, we're using something called threshold signature scheme (TSS), but there's a lot of fantastic use cases outside of Web3. So, for example, think about it this way. So multi-party computation means that you can do some kind of computation or without revealing your data. So think about two financial institutions with like data sets, and you want to check for fraud. So you can query both, and you can find like fraudulent transactions without revealing the data to each other. Or think about two hospitals with clinical data on cancer, and you wanna run something on there. So there's a lot of very interesting a lot of very interesting work that is being done with MPC and also around privacy enhancing technologies for AI, and essentially wherever you want to do something um, between parties, some kind of computation, some kind of drill, and there's either lack of trust between those parties, or there is some kind of, I don't know, regulatory restriction or data privacy restriction, then MPC allows to do that. So yeah, a lot of very interesting use cases.
Very cool.
All right, I got one last question, if you don't mind, just to nerd out a little bit deeper on the MPC thing. So, all right, I've got one key on my device.
Yeah.
You said there's 3 keys, and the wallet provider has 1 key.
Yeah.
Shares. Okay. Where's the third share?
So first of all, I really simple it down. Essentially, you can decide how many shares there are and how many are needed to sign. So let's say you have, for example, you can do 2 out of 2. So that means that 1 share is with the wallet provider, 1 with the end user, and both need to participate. But you can also do something pretty cool, like 2 out of 3. So let's say Graham. So you have 1 share on your mobile device, and you have another share as a backup, and let's say your Google Drive, and there's another share with the provider. So like the day-to-day, it will be your mobile device and the wallet provider you interact. But in emergency scenarios, you can also do like something called a local computation. You can take that backup share and the share on your mobile device, and you can extract away, you can export a key. Or if you lose your device, you can import it through the Google Drive and then continue to operate and do that thing again. So regarding account recovery, so that thing, it really takes care of the risk scenarios there.
Right. And that third share also, I think you alluded to before, could be the way to get around your wallet provider potentially censoring you. So as long as you have access to that, if it's a 2 out of 3, if you have your original share plus the one on, let's say, your Google Drive, the wallet can't stop you from transacting. If it's a 2 out of 3.
And not only that, and that's the approach that Bitcoin.com selected, which I think is very it puts a lot of mind on like the user and making sure that that although they're safe and secure in the everyday transactions, they all also have the option to opt out when they want to say, all right, I mean, and essentially, even if the servers are down, like the Bitcoin.com servers are down, and nothing is working, like a total insane scenario, then essentially that user will be able to export their key, just put it in a different wallet provider and just keep doing whatever you want. So I think that's a great mix. So you have the default is that you're secure and everything is and your wallet provider works with you. But if you think otherwise, if there's like a risk scenario, then you're free to go, and we're not going to stop you. So that's a great, I would say, mix and a respectful one for self custody as well.
Yeah, like I think what's interesting is just the idea that making sure people have that ability to remain self custody, but have some support in the event that something bad happens. We've all been thrown in a pool with our phone, and then you're like, oh no, I had stuff on that phone. It might not start. So I think like you making sure you've kind of got redundancy in place and the ability to like Bitcoin.com intends to be here 10, 20, 50, 100 years from now. But in the event for some reason it wasn't, we want to make sure that users and their funds are safe and they still have whatever means needed to access their funds without us as well. And I think that's kind of the beauty of self custody is that you have that. It's your money. You can go across border. You can rebuild your keys. I think the first time I heard about key sharing was actually around like or I guess it'd be like a secret sharing was like Shamir secret sharing, which I think that's also an Israeli guy. I had to Google it, but Adi Shamir, he formulated the scheme back in 1979. Yeah. So like the crypto nerds have been figuring this stuff out for ages. It's just like implementing some of this like tech into like a graceful manner that can be used in products. That's kind of been the hardest part.
Yeah, I agree. Yeah, well, the conversation got so serious. Well, I'll dumb it down a bit. So, I'm not sure if it's Jack Daniels or Jim Beam or someone from the whiskey industry. So there's a funny story. I don't know if it's true or not about how Jack Daniels died, and it's like it relates to the problem that we have with passwords, right? With the seed phrase or so on. And so Jack Daniels had a vault in his office. And for, I don't know, 30, 40 years, he used to go in and, open it and put, the cash inside or do his thing and so on. And then one day he just forgot it. Like, blacked out, like he had a blackout. And he was so pissed that he kicked the vault. And then he got like, I don't know, something like an infection or something. And that's how he died. So I would say, passwords is a problem, So don't be Jack Daniels. I don't know if it's true or not, but it's just a funny.
That's
story.
hilarious.
Yeah, it was.
By the way, Corbin, that example you gave of dumping your phone in a body of water, it's nightmare fuel. Please don't do that again. It scares me. I've done it once. It's awful.
It is awful.
Yeah, it's a major headache. All right. Yeah. That was good. A good deep dive into the tech there. Let's spend the last 10 minutes getting back into the crypto degen stuff, the weeds. Anyone, David, you have anything you want to share? I see you wanted to talk about Vitalik's communism post.
We got to discuss this, guys. I want to know your takes on this.
I'll bring it up. So... Yeah, so the gist of it is that Vitalik wrote, "Make communism great again." I was looking back at the context of this.
Yeah,
it didn't really make sense to me.
Oh. A person in crypto was announcing that they were working for the EF now.
Right,
right, and they had a long intro thread about it.
Guy,
and yeah, and he was talking about like some common goods stuff, kind of what could be construed as maybe communist-ish language, and people were calling it out as like, oh God, please don't do this, not right now. And then Vitalik waded in afterwards, being like, with his comment. And so
right,
then,
but by adding the word "milady" at the end, is that kind of like the modern equivalent of like "psych," or like what? What is that? I don't get it.
well, he's also said that he hates this milady kind of culture, and then he puts milady at the end of things, right? He's like, he's like, I don't subscribe to this Bronze Age mentality, this kind of blah 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 milady. So I don't know. I just want to hear your thoughts on it, because I think. Well, let me tell you mine. I think he was trying to be funny, right? I think he was trying to be
Ironic,
I don't know,
funny,
ironic or something. The problem is it. I feel like it actually didn't work because people feel that the EF is kind of leaning this way, right? And so I would say that his attempt at humor or at like a psych kind of failed because people are like, "Oh God, what is wrong with this guy?"
It tone
I don't
deaf.
know. Yeah, I don't know. Yeah, so I don't
Well,
know what you guys
I think right now it's tough because Vitalik is under high scrutiny because of Ethereum price, and all of the speculators are just like, "Can someone bull post ETH for me?" And then you've got Vitalik throwing out some kind of like, they're okay jokes. It made me chuckle. I read it and was like, classic. But I mean, maybe that the humor is not for everyone. I don't know. I like this version of Vitalik. I like that it feels kind of like he's like annoyed with the whole community and he's throwing the middle finger at everyone. And
Yeah,
I think on the one hand, people want him to be the Michael Saylor of Ethereum, but he's not. He's never going to be. He's a gigabrain, and you can't expect a gigabrain to go do like salesman's job. It's like, keep him in the trenches, working on the tech, working on the theoreticals, being himself. And yeah, I think it's great. Make communism great again. Vitalik nailed it.
I agree.
any hot takes, Ido?
Nothing serious. I mean, I agree with Corbin. It's not his job to show Ethereum. I mean, it's just not his job. And it made me laugh. I mean, I don't know. I didn't take that too serious, but it's a it's a weird one. I don't know.
My favorite part about this though were the replies from some big accounts, because there were some just like
Yeah,
absolutely banger replies to Vitalik, which just had me actually like really laughing.
like
My
Joe
favorite one
Lubin.
was the Invincibles. Was it called that Pixar superhero show? That one is absolutely perfect. Where it's the dad, he's like, "Shut up, just shut up, up."
Yeah. All right. So, anyone else have any show and tell here today before we wrap things up?
Has ETH bottomed?
Probably since I sold the last of my bags.
Oh, did you?
Are you completely
really?
out? You're completely out of ETH now. Is that your?
Yeah,
you've fully
I've got
capitulated.
I've got a few NFTs and some gas. But
Damn,
not packing ETH anymore.
I get it, but man, I don't know. I feel like ETH is kind of like a 10-year play. I think if you're day trading it, it's maybe kind of a tricky one for sure. I don't know.
Well, I wanted to bring this up real quickly because I don't know if you guys saw this, but the Barachain launched 3 or 4 days ago, I believe, and it's been down only. It launched at almost $700 billion valuation, $13 per token, and it's now 200 FDV and 550 token price. So
Looks
the question, yeah,
looks like a typical IPO. But
think
if you check out the correlation to Bitcoin, probably you'll see that it's, or I don't know, any other. So probably it will be just like correlated to the market. I don't know. What do you think? What do you think?
Well, I just thought that, is there appetite for another big layer one.
There's two more coming out this year, right? Like this is the first of the big three. We have Monad and Mega ETH. So I to me this
does
goes
not portend well.
Exactly. Do you remember last year the we talked about like the big multi-billion-dollar airdrops that happened last year? These huge events. Was it like ZK Sync, Layer 0, and I can't remember the other one. And they all flopped, right? They were massive, massive flops, right? Down only. I think some have recovered now at this point a little bit, but I have a feeling that this might be the version of that, right? Like the big three airdrops that everyone was like farming and waiting for all during the year, just absolutely just wrecked. And I think Monad probably will follow the same. Mega ETH, I'm really interested to see how that goes, actually. That's the one that might buck the trend, but I don't know. It's hard to say.
Yeah. I've had a lot of friends that are smarter than me get excited over Mega ETH. So I just assume there might be something good there. I didn't get any of the cool NFTs to participate. So I'm gonna wait.
One ETH. I'm gonna pay an ETH, 1 ETH for an NFT.
Wow.
Yeah.
Wild. They raised it all too. It was like crazy.
I mean, it's a tough market to launch a new L1, but I will say those teams are super well funded. So they need to build. They have the resources, and now they need to build. They need to show that they provide value to consumers, to other companies, to builders. And if it takes a couple of years to grind and then to become a major L1, then that's probably very healthy. I mean, that's life. You need to work hard.
Yeah, I
Well
think the tricky thing is like a lot of these crypto companies, they launched when it was easy, right? And then I think a lot of projects now launch in this market, in the crypto industry, thinking, well, everyone else is making millions, so why can't I make millions? And you might have the most interesting tech or the greatest solution to L1 scaling or L2 scaling, but like, yeah, it's a weird cycle. And, you can't really blame everyone that's in it already for being kind of exhausted. There's a lot of ups and downs, and timing the market. You're never going to launch at the perfect time. Like you can't expect that. And I think a lot of projects just have to be willing to eat the shit sandwiches and work hard, put in the months, the quarters, the years, potentially the decades, and maybe you'll become successful. But like the instant unicorn overnight thing that we saw, maybe it's good that it's no longer happening, because a lot of those unicorns probably didn't deserve unicorn status. They just didn't have the users. They didn't have revenue. They didn't have like any major adoption. They're just kind of cool toys. And I don't know. I kind of think like if you're going to build big, you got to be willing to like put in big amounts of effort. And some of these guys are looking for an easy, the easy 1000x. I don't. Maybe the market has matured so much that those things just aren't going to happen anymore.
I think also, like part of this, Corbin, is that they are so VC backed, right? Right? Who's selling the Bear stuff? Is all the people who got allocations earlier, right? So, I think probably what happened is at the end of last year when Hyper launched, and it did really well because there was zero VC backing. I think all of these projects were probably going like, oh God, and especially the VCs that were in the rounds were like, oh no, because I think I saw on X that Bera is now below the last round that VCs got in, right? So you can buy Bera at what it was before.
Yeah, I don't think it's
lower price.
Lower, but it's not much higher.
So, I think if they could redo it, they would probably take less VC money next time to try to build a community that way, right?
Has anyone launched a down only podcast yet? I wonder if we're at that part of the cycle.
Kobe has teased a couple shots of the up only studio thing a couple times, and people were like, "Oh!" So I think maybe that's going to be a top signal if he does another one.
All right. Let's wrap it up, gentlemen. Thank you so much, Ido, for joining the pod. And thank you, David and Corbin, for your insights as usual. Thanks for everyone who joined. We'll see you next week on Token Narratives. Adios.
Hey, guys.